And as you've just heard, we've also been seeing Heineken shares get hammered a little bit after the world's third largest brewer said full-year earnings are unlikely to grow in 2011. You can see those shares down by 14%. Now, the company's preferred measure of profit will do no better than last year's 1.4 billion euro figure. Bear in mind that it made 1.2 billion before tax in the first half alone, though. Now, already hurting Heineken are poor weather and low consumer confidence over the past couple of months. And let's get more on those numbers from the man who knows them best. Heineken's Chief Finance Officer, Rene-hooft-Graafland, is with me here in the studio. Thank you so much for joining us. In terms of the outlook, I think the markets are a little bit concerned that we're going to see a double dip, that consumer demand, certainly in a lot of the western parts, is not growing. When do you expect demand to stabilize, and what can you do to counter this trend?
Well, let's start first with the good news. In the first half of the year, we have seen volume growth across all geographies. Clearly, the second half of the year will be influenced by the very bad summer we're having in Europe, and we have all experienced that. At the same time, we see in some of our key markets in Europe and the USA, consumers are uncertain, are looking out for what's going to happen, and you see that reflected in conservative spend, and certainly in a business which is very dependent on the on-trade. There you see where the declines are. On the other hand, you see that the emerging markets have still very positive trading conditions, and with the shift within Heineken towards more emerging markets, we are benefiting from that.
So will you just continue the shift, or how do you recapture consumer sentiment in a time where people are watching what they spend and what they have in their pocket?
So we will continue to grow in the emerging markets, and that will something what we see going on, because there you have population growth, you have economic growth, and relatively good political stability. At the other hand, in the in the developed markets, we see still possibilities. So we are pushing more premium propositions. We are investing behind our brands. We are investing behind higher margin categories, and we are investing in innovation.
Now, what about acquisitions? I know you've already acquired certain companies, certain brewers in Ethiopia and Nigeria. Anything else on the table that you'd be looking at?
Well, obviously, we don't comment on what we are planning to do. We have expanded the company in a big way. We have rebalanced our footprint into emerging markets. We continue doing that, and you cite Ethiopia, a very exciting new venture. 85 million people, still very low per capita consumption, so a lot of growth to be happen. And you can imagine that we continue to look out for further opportunities.
Big companies, I know you can't comment too much, but on Bloomberg we haven't spoken about anything else over the last couple of days in terms of corporate news. And Foster's, is this a company that you'd be interested in, that you wouldn't be interested in? Would it make strategically sense?
Well, we never comment on specific targets, but as you know that we want to further expand in emerging markets in areas where there's population growth and economic growth, you can draw your conclusions.
In terms of what we're seeing for a lot of your debt, you have a huge refinancing option or bonds coming to maturity, I believe, in 2013. The markets here now seem a little bit uncertain in terms of, money lending and refinancing options. Are you likely to refinance that money earlier rather than later in case we have a double-dip recession?
We will always be at the safe side. You see that we have deleveraged the company in a big way in the last two years. Net debt EBITDA ratio now 2.1 times, which is pretty good. At the same time, we have a headroom in the company of 1.9 billion, so we feel quite comfortable looking at the repayment schedule going forward. But you can be sure within Heineken that we always take it on the safe side, so we will refinance on time.
Are you concerned about a double-dip recession? I understand that you're more skewed into emerging markets, but if there's a double-dip recession, of course, it's our countries here in Europe, but also the US that will be hurt the most.
Of course, nobody would like to see a double-dip recession. It's difficult for us to see what it will be. What we currently see in the markets is that consumers are very cautious and watching out what is going to happen.
And you think this cautiousness will continue for another year and a half? A lot of investors and a lot of economists have been telling us this may last 2-3 years, this kind of sluggish growth that is not really going anywhere.
It's difficult to say. At least in what we plan, we are not betting on a quick upswing in the economy, so we are better on the prudent side in the way how we plan our business.
All right, prudence is always key. Thank you so much, Mr. Graafland, for coming in the studio.